Hi, everybody. I am Bob Icino. Welcome to another Market Think Tank Live. Thank you again for joining us. We're starting to get some real traction with this show. So the more you watch us, the more you watch our replays, the more shows we're going to be able to bring to you. And before I bring in my first guest, I just want to do a quick market check since we got so much volatility last week. We're looking at a Dow Jones futures. I'm looking at the future side now, and these are the June futures. Up 34 basis points. For those of you that don't know what a basis point is, basically 10 basis points is a tenth of 1%. 100 basis points is 1%. That's just the way we talk. Little trader vernacular lesson there. So anyway, I've got the Dow Jones up 47 basis points, about 0.5%. The S&P up 60 basis points. The NASDAQ up 83 basis points. And the Russell up 57 basis points, or again, just about 0.5%, a little bit more than that. I want to get to my first guest, President and CEO of Prosper Trading, Scott Bauer. And Scott, you know I'm a subscriber to Prosper, and people can take what that from they want. I make no revenue off anything Prosper does. I just like your work, your team's work there, Mike and Charlie and Howard, all doing great work. But I want to bring you on to talk about something specific that you mentioned to me over the weekend, and that's Nvidia. You're really interested in what's going on with this stock split and how it affects earnings and what it means toward earnings. So if you could just come in, say hi, and get right into the subject. I want to make sure you get the whole 12, 14 minutes about whatever subject you want to cover.
Yeah, absolutely. Good morning, Bob. Good morning, everybody. Thanks for being here. And, you know, I've been doing this for 30 years. I've been trading options for 30 years. And this may be, Bob, one of the first times I've ever seen a major announcement like this, the stock split, literally a couple days ahead of an earnings report. Usually when you get a major announcement like this, it's either in the middle of an earnings cycle, so it has nothing to do with earnings, or an announcement like this is made during the earnings release, during the follow-up. So this is just kind of odd to me. And listen, I love NVIDIA. I think long-term, I know long-term, I am a NVIDIA bull, have been for a long time. This one, though, as a 30-year vet, just doesn't pass the sniff test to me. It's just really odd to me why they would announce this a couple days ahead of earnings. So I'm taking it for no other reason than it just doesn't pass the sniff test, as something might be up here in the report. And I could be absolutely wrong. I've certainly been known to be wrong before, but that's the beauty of trading options, is you can take a position and have 100% completely defined risk. If I'm wrong, okay, I'm wrong, but I know what my risk is. So I'm actually buying some put spreads in NVIDIA ahead of the earnings print. Now, if we do get a bad report, this thing drops, great for my put spread, and I will be buying into that because I want to buy NVIDIA on any drop. But again, this thing just doesn't pass the smell test to me. So some of the strikes that I'm looking at, NVIDIA's, I'm looking here up, pre-market a couple bucks here. I'm looking at it either buying this week's options or next week's expiration, the June 4th, somewhere around the 575 to 550 area put spreads. The reason I'm selecting those strikes is because, at least as of Friday's close, the market was anticipating a move in the stock. It was built in of about a $25, $30 move in the stock. So I'm buying put spreads down there. And again, the beauty is, if I'm wrong, okay, I'm wrong, but my risk is 100% defined. But I don't know. Again, I've been doing this 30 years, and I honestly don't recall a single time where I have seen an announcement like this.
Okay, so this is super interesting to me. And let's pull up the NVIDIA chart that you sent. And we're talking about a stock that closed at $599.67, and my pre-market is showing at about $607.20. So here's the chart you sent me. We've got a 50-period simple moving average on this chart. Tell me what you're seeing here. I mean, obviously we have a jump in the stock. You're seeing it on this chart, and you're going in put spreads while being a bull. Explain to people why that makes sense.
Yes. So first off, the 50-day moving average, the simple moving average you have on there is right around the 560 area, which coincides real closely to what the option market is pricing in on a move either direction. So I just think that with all of the news that we've seen with chip shortages, this, that, and the other, that they may say something that is negative for the short run. And that's why I'm looking for a downward move. However, if we get that downward move down to that 50-day moving average that you see on the chart there, and actually the 200-day, I'm looking at my chart here, the 200-day moving average is just a little bit below that, down at 540-ish or so, I'm a buyer. That's where I'm a bull. I am a long-term bull in Nvidia. But again, this is a specific trade I'm making that is just tied to the earnings report. And again, maybe Nvidia has complete blowout earnings, great guidance, and the stock rallies. And if that's the case, that's the case. I have a loser of a trade, but I'm willing to accept that risk. I know what my risk is. It's defined. And I've said it multiple times here, something just doesn't pass the sniff test here.
So again, I wanted to get into that right away, and I want to get your general market tone as well. But go into something for me. Let me just give you an example of what happened with us last week with myself and Mike Arnold, who'll be on the show later. We actually put in a bid to buy Regeneron about $8 below where the market opened up. Now, the reason I bring this up is one of our clients actually called and said, I don't understand. It's trading 520. You're bullish, but you want to buy at $8 lower. Full disclosure, and ended up going $8 lower and more than that. We bought it at 512. We had some people get in at 503 that I know of, and it ended up rallying from there. We were up on the stock the last I checked. When you say you're a buyer down there, would you rather miss the trade or chase the trade? Is this something you guys do? And do you do this in options or the outright? Or are you 100% options?
100% options, number one. And I will never chase the trade. If I'm right technically, fundamentally, but I miss a trade, all right, it's obviously a bummer, but I'm going to move on to the next trade because you and I both know we've been doing this a long time. There's always going to be another trade to make, right? You got to take that FOMO, the fear of missing out of the equation. Otherwise, that can really impact the types of trades that you make. So I am willing to forego an upside move here in the hopes that I'm going to be able to buy it cheaper. If I can't, okay, I miss it and I move on. But again, longer term, I'm a bull. I just think something's coming out in this report here that in the short run, and it could be short run in terms of a day, 2 days, a week, that this stock is going to go down.
Okay, so you send out a note on Sunday nights, and I always read your note as one of the first things I do on Sunday evening when it comes out. You send one, Jimmy sends one, Jimmy Iuorio, who will also be on the show later today. So I read in your note, you talked about Bitcoin, and I don't want to paraphrase what you said. And oftentimes, you guys do have a crypto arm of Prosper Trading in terms of education and signals and the like. Tell me about what your overall view of last week's. Actually, let me lead in with mine, if you don't mind, and then you tell me if I'm right, wrong, or if you disagree. I actually heard it phrased the best this morning with a guest on Bloomberg Television. I wish I remember the guest's name, but I don't right now. He said that volatility is the price you pay for the returns you can generate in crypto. Does that make sense to you? My stance was, a client called me up and said, cryptos are falling, what's going on? And inherent in that statement is this idea that they can't fall. So when you're looking at Bitcoin, you're talking about Bitcoin causing sort of a ripple effect in other markets. What do you mean by that?
When people see volatility, all right, the natural feeling of that for a retail trader, for people just that are trading on platforms here, the natural feeling is that I tense up and there's risk off all of a sudden, right? Most people, Bob, don't like volatility. They look at volatility as a bad thing, that is a negative thing. So the retail side of trade here looks at that massive volatility we've seen in the crypto space recently. And because the world and most markets are now interconnected in some way, shape, or form, they look at that and say that's going to extend over into the equity markets, into the fixed income markets. I'm not so sure in the real world that that the correlation is necessarily there like that. However, most people, the retail trader, the street trader, if you will, are going to believe that. So that's why I said that the recent volatility that we've seen in the crypto space last week, and especially over the weekend, certainly has the potential to ripple over into the equity and bond markets this week.
Do you think it's just losses, or do you think it's margin combined with losses that can cause it to spill in? Jeff Kilberg, on a clip that he did, Jeff was on our show last week, said margin is margin is margin is margin. That was his view on it. So if there's people that are trading cryptocurrencies or anything else on some sort of margin, which I don't really understand yet, but in terms of cryptocurrency margin, do you agree margin is margin is margin? Or do you just think as people had losses and were trying to raise cash by selling stocks as well?
I think it's actually a combination. Jeff is absolutely right that margin is margin regardless of which space you're trading in. But no, I believe that is completely correlated in that regard, that if they're covering losses, they've got to, raise the capital, raise the cash somewhere else to cover the losses somewhere else, especially if they're trading on margin. So I think that has definitely added to the volatility. But one thing that I do think is going to shape out here is we are going to start, in my opinion, seeing a divergence, not a convergence, a divergence between the crypto space and the equity or fixed income space. Meaning just because one market is trending one way doesn't mean the overall market, doesn't mean that other market is going to be trending as all. And I certainly believe with this last bit of volatility, this last bout of sell-offs that we've seen in crypto, I think we're going to start disconnecting from the overall market a bit.
That's really interesting. So the crypto files, for lack of a better word, early in this sort of run prior to getting up to 64,000 on Bitcoin, more about the move past the old high of 19,000 and change. We're talking about how cryptos were not correlated. But if you look lately, they've been, I don't want to say historically, but recently have been very highly correlated to the FANG stocks. Do you think that's what's going to diverge?
I do, absolutely, because I think what people are going to start realizing is crypto is its own thing here. The equity, the bond market is its own thing here. Now, there's always going to be some connection between all markets, like we just discussed, where people trading on margin, they may have to, borrow from Peter to pay Paul, right? So there's always going to be that sort of connection. But in terms of, if risk assets like the crypto space go up, then risk assets maybe in the equity market, fixed income market are going to go up as well. I think we're going to start seeing that moving farther and farther apart.
I'm really taking advantage of your general knowledge here, but you specialize in equity options. You want to buy Nvidia put spreads. You also specialize in sort of the macro view of the markets themselves. Are you bullish? Are you bearish? Do you think yields matter? Just give me your macro picture before we let you go.
I am bullish. I do think yields matter if we start to see something on the 10-year over 210 or so. 2 is a big psychological number. The 170 number that everybody freaked out about just a couple months ago, if we hit that again, probably not a big deal this time. People will get desensitized to it. If you look at historically, even if we got to 2%, that's still really, really cheap. It's just not compared to where we've been over the last 3-4 years. I am bullish. I think by the end of the year, we're probably 10 to 15% higher.
Scott Bauer, President, CEO, Prosper Trading, former Goldman Sachs Vice President, former market maker, actually one of the first market makers, if I'm correct, in Amazon, right, Scott? Where can people find you and Prosper Trading if they need to find you?
ProsperTrading.com. Thank you, sir. Appreciate it.
Simple enough. Scotty, thank you. And we'll be right back. Quick message, and we're going to come back with Jim Iuorio, Managing Director, TJM Institutional Services. We'll be right back.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets. And Gold markets. Okay. I'm plugged into equities. Trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
We are back. I was just joking with Jimmy about my weekend where I need to borrow some of Jim Iurio's energy. Jim Iuorio, Managing Director, TJM Institutional Services, and one of the most active and funny Twitter accounts you'll ever see. Jimmy, it looks like you're bullish again to me. From what you sent me this morning, I read your note. Just telling Scotty, I always read your note and his note before I start my Sunday evening bourbon to calm me down to get me to sleep. Tell us about your note. Tell everyone about your note first, because I don't want to paraphrase. I want you to tell them what you're thinking.
Okay, here's what I kind of like about the stock market is that they've been able to shrug off a bunch of things. Most recently, the absolute implosion in crypto. Now, when we talk about disruption in certain markets rippling through, a lot of times people just look at them and they're like, wow, well, stocks don't really like uncertainty. Well, that's part of it, but also there's a fundamental and organic reason too, is that oftentimes big hedge funds have levered up on one thing and have to meet margin calls when they're getting their ass handed to them in something else, and that ripples through everything else. We can say that kind of stuff on this show, I'm hoping, right?
You can.
But anyway, it didn't happen. It didn't happen in stocks. The stocks are still looking relatively good. Friday, we shot above some serious support, couldn't hold it, but today we're challenging it again. So I am a qualified bull. The bull needs to go above 41.85, which was Friday's high, and hang out there for more than just a couple sips of coffee before I get more bullish. But I'm getting bullish now, and I'm going to add to positions if it goes above that. But I like the fact that it's weathered the storm.
We're up a little bit right now in the pre-market. I'm looking at the futures. Quick market check. Nothing really new from when I talked to Scott Bauer. 44 basis points higher in the Dow futures, 58 in the S&P, 80 basis points in the NASDAQ futures, and about 54 basis points higher in the Russell. So ever so slightly lower when I did the market check with Scott. Now, I always like to include the Russell, but I'm going to throw something else in. Crude oil is up 1.8%. Copper up 60 basis points. They were a little weaker last week. The commodities were kind of slowing down. It was especially notable to me in copper. Do you see any sort of problems going forward? Do you think that was just some sort of squaring into the weekend? Or do you see problems with some of the events that are happening? We had a jet grounded in Belarus. We have infrastructure arguments going on here in the U.S. We still have flights between the U.S. and the EU limited, but I'm sorry, within the EU it's there. U.S. and EU limited. London and U.S. nothing yet. What's your big macro picture fundamentally?
Well, there's somewhat of a, we know buy the rumor, sell the fact. We've been talking about that for years in this business. And I think the huge run up in stocks and lumber and copper and everything, and I'm going to get to crude and gold and silver in a second because they were kind of left off the first wave higher. I think we're realizing that, yes, we are actually stepping out of the shadow that was the pandemic into something that's going to be more explosive growth. Well, lumber is already priced in that explosive growth. I don't know where the hell it will go from there. So I have no interest in that at all. But now I think that it's a rotation. Crude was left off the list. I'm not sure why it didn't rally all that much considering what other things did. And they're the most probably hinged to an explosive opening. So I like crude. I've been long some of the crude names. I haven't been long the futures contract yet this year. I don't think so. But I plan on being that, particularly when they come up with those micro crudes, which is about a month and a half from now. But I like gold and silver. And I think you're going to know why I like gold and silver is that they were forgotten and left for dead because the new world, the millennials had a much better dollar hedge trade, and that was cryptocurrencies. Well, every once in a while, cryptocurrencies shows what the flaw is, and the flaw is that it's too volatile to be any sort of real serious store of value at this moment. And again, we've talked about crypto a lot, and I'm long crypto, but that's why 2 weeks ago I bought gold on a Sunday night. I'm still long silver and I'm still long platinum, but platinum kind of falls into both camps.
Yeah, we've been long silver actually since February 2nd. A little bit of an early entry into that trade, but we haven't lost money, which means I don't have to do anything with it. I can just sit. I think there's a physical silver shortage. But you mentioned the micro crude, and I hate to go off. Obviously, we're sponsored by E-Trade and the CME Group, but this micro crude is something, you know me. You know I love crude oil. You know I love trading it. I talk about it on your show all the time, which will be, you have another show on Friday, is that right?
That's correct. Friday at 3:30 Eastern Time, Futures Edge with Jim Iuorio. I can't believe it took us this long to plug that show on Friday. Be there, though.
Usually one of the first things, and I'll have a crude trade. I'm really, really, really excited about this micro crude, like off the charts excited, because even for me, I've been trading crude oil since about, regularly since about 2010. And the big contract, sometimes I'd have to pass on a trade simply because my bounds on the crude oil trade were too hot, were too wide, and the trade just got too expensive for my account size. And that's fine. That's just a trade that I pass on. I look at that like a break-even trade. And we've talked about this. There's three things that can happen in a trade, three outcomes. There's a win, a loss, or a break even, and two of those are good. When I'm not in a trade because there's too much risk, it's a break even to me. So I just broke even.
Oh, yeah.
That comes from us being in the pit, wanting to scratch a trade rather than take a loss. Having said that, your overall view with this call condor is ever so slightly bullish, like it's controlled bullish. It's one of the things you like about the futures markets. Let's talk about your actual trade now, because I really, really like this trade.
Okay, yeah, I do too. And like I said, if it goes above Friday's high, I'm going to either add to this or get long in other ways. But this is what I'm kind of excited about. It's the week 1 June Wednesday. So that's June 2nd Wednesday, a week from this Wednesday is when it expires. It's the 4220, 4260, 4265, 4300 call condor. It sounds complicated. It's not the slightest bit complicated. Here's what you're doing. You're buying the 4220, 4260 call spread. So you got a 40 tick wide call spread. Now there's 5 ticks in the middle, and then you're selling the 4265, 4300 call spread to help lower the price of that, what you really want to be long, which is the 4220, 4260. There's 5 ticks in the middle, so that could settle anywhere in the middle and you make the full amount. As Bobby and I talk about all the time, we don't really plan on making the full amount when we put on flies and condors. That's really threading a needle if you think you can do that. But now keep in mind that the first call spread here is 40 ticks wide, and the second call spread is 35 ticks wide. So even if the market shoots way higher and leaves all these levels in the distance, you still have 5 ticks and don't lose that much, because I paid 6 3/4 for it. So that risks $337.50 to make a potential $1662.50. And remember, we don't really plan on making all that money. If we get a double or a triple on this, we count our blessings, collect our money, and go home.
Yeah, if I remember correctly, your last trade on my show was a winner. Your last trade on your show was a winner. And they were all forms of the same type of trade. Do you ever buy a call spread and sell a put spread to fund it? Or would you rather just do futures there?
No, I like to buy a call spread and sell a put spread just because I like to know that my risk is completely defined. So like when we said I'm going to be more bullish if it hangs out above 41.85, then to me, if it can be there for part of the day and not seem like it's going to just blink and go down, then I might actually buy a call spread, sell a put spread as a complement to this trade, but a more aggressive one.
Where do you think the most pain comes in terms of yield? You're also a pretty well-known, skilled interest rate guy. Where's the pain trade? And by pain trade, I mean what causes the most people to need to exit their position? That's what we mean when we're calling something a pain trade. Do you think it's higher yields or lower yields?
I think it's higher yields. I think it's 2% yields, and we talk about this a lot too. It's not necessarily getting to 2% yields. It's how we get there. If we get there quickly and we shoot from where we are right now to 2% in a matter of days, the market will easily be spooked. And by the way, if the market is spooked by interest rates, the stock market will break. We can look at crypto and say to ourselves, well, where's the ripple effect going to be in this? And we found out so far, and this is still inconclusive, but that it's not that strong of a connection. But when rates go too high, there's absolutely a connection, because every hedge fund on the planet, every bank on the planet has positions in stocks. They have positions in rates, not so in crypto.
So Scott Bauer wants to buy an Nvidia put spread, but he's bullish the stock. That sort of jives with your overall view, doesn't it? Because your call condor is mild to very bullish, but it's not insanely bullish. You're not like, I'm just buying everything. I'm throwing the whole Brant's deed. Brant's Restaurant, Palatine, by the way.
Brant's Palatine.
Brant's
Wonderful.
Palatine, another plug for Jimmy there. Which, by the way, I'm going to be in Chicago for Memorial Day, and I'm going to try and swing out and have a.
Oh, good. That'd be fun.
Yeah, so you can raise your prices just before I come in and buy a burger,
That's
and then you can lower them again.
You got right.
Yeah, so I would call you mildly to very bullish. Is that fair with this call condor?
I'd call it mildly to medium, and I'd say I'm waiting for a couple signals to check off my list to make me more bullish.
Okay, so at June 2nd, that's Wednesday of next week, 4220, 4260, 4265, 4300, call spread, basically a condor, right? You're buying one call spread, you're selling the other. What else do you see on the horizon that could hurt or help? Just what is your number one theme? Do you think the cryptocurrencies, Jeff Kilberg on an interview I watched over the weekend said margin is margin and margin. Margin is margin is margin, which is, Jeff's good at theater of the obvious. So from margin is margin is margin, do you think it was margin bleeding over into equities when Bitcoin sold off? Do you think it was people trying to raise money because they wanted to hold on or buy more?
I think there was a small amount of margin is margin, meaning that people have to sell equities to meet margin calls in crypto. But I don't think it's as big a crossover as we thought it was. And I think if it was, we would have seen more of a break in the stocks, and we didn't. They held up pretty well. What I do think is the theme we haven't mentioned yet is that the NASDAQ, the tech stocks, you mentioned NVIDIA, they've been under some pressure in this rotation trade. They haven't made a new high since early February, so they're in a bit of a correction. I think if that starts to slip to the downside and becomes a less elegant of a transfer, that could bring down the other indexes with it. But I thought if that was going to happen too, that would have happened already. So I'm becoming less worried about that.
So before I let you go, we've got Mike Arnold coming up next. Then we got somebody really interesting, Kyla Scanlon. I think you should check out the rest of the. Normally, Jimmy just likes to look at himself and hangs up on the show and goes away.
Yeah.
But you might want to check out Kyla at the end of this show. She's super interesting the way she looks at the markets. Where can people find you, and how can you help them? Like if they reach out to you on Twitter, will you help them with this trade?
Yeah, I always do. I try to, unless too many people do. But it's at Jim Iuorio, JIMIUORIO, just like that. There's about 4 other guys who have different derivations of that, and they're trying to sell you stuff. But I like to help people on Twitter. This is what my passion. So if you want to talk about options, just contact me on Twitter. And if I'm too busy, I'll send you over. I'll give you Jeff Kilberg's cell phone number, and you can call him. But please come along for the Twitter ride. It's good fun.
It's almost not fair to pick on Kilberg when he's not here. He's actually one of the smartest guys out there, but he's just when he's not here, it's easier to pick on him because he can't come back.
No doubt about it.
By the way, I like the short sleeves. We get you to do a front double bicep next time before we end the show. But there's no time for that today. Jimmy, thank you. We're going to go to a commercial. We'll come back with Mike Arnold, who is the Chief Technical Strategist at Path Trading Partners, also the co-portfolio manager of the stock think tank. We'll be right back. Thanks, Jimmy.
Thank you.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Thanks for sticking with us. I got Mike Arnold, who is the Chief Technical Strategist at Path Trading Partners. He's also the co-portfolio manager of the stock think tank. And I want to do a quick market check again, because we've got the Dow is actually coming off a little bit on the future side of things, and we are basically opening up the cash right now. So Dow's up 34 basis points, S&P up 53, NASDAQ up 0.75%, and the Russell up 52 basis points. Now, we're not going to talk fundamentals with my partner, Mike Arnold, because he does not care, which is one of my favorite things about him. Mike, you are looking first at the NASDAQ, and I don't have a NASDAQ chart prepared, unfortunately. I love the tie-dye, by the way. We've got a double bottom that triggered on Thursday. First of all, tell people what a double bottom is, and then explain. It's in the NASDAQ. It triggered on Thursday. It's a reversal pattern higher. What's a double bottom?
I think you just summarized it pretty well. There are certain parameters that we've really tested these out, and you have to have two bottoms within a certain range of each other, and then we project up from the peak. So the peak, let's see, the peak was on the 17th of May, and the high was 13,448.50. We closed above that last Thursday. We had a little pullback, which I love to see, retesting that peak area. And today we're getting the strong rotation back up. What this is, and it has to be within parameters because it has to be a reversal pattern, as you said, that reverses a move, and everything lined up with this. And now we have three targets. Our first one is where we reduce our stop, which is 13,715.25. The next one is where we can either reduce our stop or take partial profits, which is 13,848.75. And the final target is 13,982 even. And that would take us up real close to the most recent highs.
Give me that second target again, because that's obviously it's closer, so it's more reliable. It's easier to get to it. But what was that second target, that exact price again on the NASDAQ?
$13,848.75 to be exact.
That's the futures or the cash?
That's the futures.
Okay, so that's the futures target on that one. And that is a trade that you aren't recommending, because you're not necessarily here to do that. But you're saying that's a safe trade to get into because it's triggered, it retested. There's multiple things going toward that target, is there not?
There's multiple things going towards that target. On the weekly basis, we have a concept of, which we've talked about in past shows, of the rotation zone, which is a pullback between the 8 EMA, exponential moving average, and the 21 EMA. So 2 weeks ago, NASDAQ had a bearish week, pulled down below the rotation zone, and then closed within it. Yes, last week it dropped briefly below it, but then closed in it with a slight up close, almost a doji, but slight up close. And so far, it's only Monday, but we're rotating up. So that's another very solid pattern. But the pullback to the rotation zone sort of reset the overbought condition. And now we're getting that nice, we call it the rotation zone, because we watch for the rotation back up in the direction that the rotation zone is supporting. And this is a bullish case. So that's why I'm at least watching for something near the most recent highs. We are running out of momentum in the NASDAQ, but I would not be surprised for this double to hit the targets and then to reevaluate to see if we've picked up momentum or if we've just generated another bigger topping pattern.
All right, so I want to get to your charts because there's a couple things going on here. In the stock think tank, you have a core portfolio, and then you have these special high beta plays, right? Special plays. And Nautilus is, I believe, one of the special plays. The stock is NLS, is the stock ticker. And you sent me a chart this morning. Let's put that chart up and tell me what you're seeing here in this Nautilus chart. It's on the screen now.
Yeah, we entered this, what date do we get it? We got in on the 19th. We've got a little pullback since then, but this has a really nice bottoming formation. I have the harmonic levels on there. You'll see those are in the 12.5% increments. Those are the blue lines. We've now run up and we're basing just below that 25% retracement level. And that is a pretty bullish pattern. It's a nice extended base, moving sideways, and now it's ratcheting up a little. You can see the prior resistance area that was right around 1770, has now been tested as support. One of the concepts we use a lot is resistance becoming support, and we're looking for that support to hold and then get above that 1841, which would be then a very bullish pattern. So this is still something that it is definitely tradable. And then we're looking, let me give a full target on this. I just have to look at my other screen. Our full target on this is 2140. So that's something that's definitely actionable.
Does it bother you that you're sort of against that flat 200 right now, or just it doesn't bother you at this point?
Not really. We can come up, maybe test that, pull back a bit, but it might be some short-term resistance. But again, it got pretty beat up. It's trading below fair value. It's made a great basing pattern. So longer term, we are bullish on this.
Okay, so let's go to the next one, because again, you've got 3 charts, and I want to look at all 3 of these before I let you go. And as long as these interviews are ours, it just always seems that we run out of time. We've got an Intel chart. Now, Intel is something that we also just entered on Friday in the stock think tank. I like this one a lot, but I'll let you take it from here. So what you're seeing on this chart.
Well, we already talked in the NASDAQ, and this is a great representation of a double bottom. So the NASDAQ, I said, had a daily double bottom. This also had a daily double bottom that confirmed on the 20th of May, triggered, actually, we got in this a little early. It still confirmed. It's going to trigger today because we don't trigger it on a down move, but we front ran this pattern because sometimes in these tech stocks, they just run, especially now. We were also looking at an Apple thing that ran from us that we couldn't get in. So I did a little front run on this pattern, but you can see it on the chart you have up. You can see our key levels. 57.50 is stop production, 58.18 is the first target, and 58.86 is the second target. And the second target, or is the second profit target, the third actual target. And that's coming in right with the declining 50-day exponential moving average. And that's going to drop a bit down as this rallies, but those are pretty good targets. That doesn't even take us to the gap fill. So that's what we're watching for eventually. But since we're playing it as a double, our next major target is at 58.86.
So let me ask you, I'm kind of going off topic a little bit here, but so I mentioned earlier when I was talking to Scott Bauer that we had a client of ours, yours and mine, ask why we wanted to wait in a stock like Regeneron for an $8 pullback if we thought it was going up. Without committing you to any actual data, because you don't have it in front of you, I'm springing this question on you. This person wanted to get into Regeneron 1.5% higher, basically, than the target entry price that you calculated out, that you picked out. We ended up getting in that trade. Would you be able to spitball or ballpark the effect of a portfolio of chasing trades like that? It's obviously a poor effect, right?
Yeah, you don't want to chase trades. It's something that we already alluded to earlier in the show with, I'd rather miss a trade. Mm-hmm. I'd rather, we say it's a break-even trade if we miss it. I'm not going to chase it. If I repeatedly chase stuff and give up a percentage point here, there, and the other thing, it can have a major effect on a portfolio long term. So I'd rather, hey, there's always another trade. There is always another trade. Sometimes I've had some trouble. Our portfolio got depleted because we hit a bunch of targets, and then I wasn't able for a couple weeks to find a lot of decent trades. But now some things are starting to set up again. I'd rather, keep cash on the sidelines and wait for the better setups and not chase things than to get us in at bad positions and then give up percentages here and there.
All right, so you just went into 2 stocks that we already got in. Applied Materials, AMAT, is on your watch list. We've got a weekly chart that you sent us this morning. What do you see here in Applied Materials?
Weekly chart, well, here's a great example of the pullback to the weekly rotation zone. And once that chart goes up, you can see we have between the orange and the blue line. And actually, 2 weeks ago, dipped slightly below the blue line, but we watch always for closing within the blue line. So bouncing up off the bottom of the rotation zone. Last week, we got the nice rotation back up. And then do you have a daily chart for that one too?
What's that? The daily chart? My bad. I did not load up the daily chart, so you're just going to have to speak to it.
Well, the daily chart, we're actually today getting above a really nice trend line trade. So this is confirming the rotation back up. We're going to get something we call a double cross pattern on the daily, which is the rotation zone crosses down and then back up, which means you got the correction on the higher time frame. And so I'm looking at this, and I lost my fair value calculation, but fair value 167. It's right there. So this has room to at least, without exceeding fair value, it has room to at least retest the most recent highs. So that's something I am watching for and looking to get in now in the core portfolio.
So Kevin found the chart. So Kevin put it up. Thank you for that, Kevin. But we did get to see the trend line that you were talking about. Now, from that perspective, you talked about the portfolio emptying, and it kind of emptied, almost went completely empty from a potential 15 stocks to like 3. Right. And now we're starting to refill the portfolio, and it coincides with this magical double bottom pattern. Are you ready to say yet that your target's being reached and no new trades popping up for you? Are you ready to say that's predictive of short-term sell-offs yet or not yet?
It's generally what generally happens in our portfolios. We do hit a lot of our targets. We get out of positions, and then I have trouble. And you mentioned earlier, I don't look a lot at fundamentals, but if something's fundamentally, we do a fair value calculation, and if it's fundamentally way overvalued and then I can't find a good technical setup, we're just going to pass on trades. And we couldn't find good technical setups, and the things that were sort of technically set up, they were fundamentally 20 to 30% overvalued. So yes, they can go up, but you are taking on a fair amount of downside potential risk for very minimal upside gain. And that's something we won't put people in the portfolio, because we're going to risk 20% to make 3 or 4%. That doesn't make sense long term, because if the market does turn, you're going to take a bunch of big losses with very little potential upside for the overall portfolio.
Mike, where can people find you if they want to? By the way, we talked a lot about crypto. We didn't get into crypto with Mike, but Mike has an extremely credible, extremely popular, and extremely detailed YouTube channel, Pat Trading Partners, but Mike's the one who runs it, where you talk a lot about crypto. So where can people find you if they want to follow you, if they want to get to know you? Also, you can learn about double bottoms. You go to pattradingpartners.com, and there's a store tab there. You can learn. We have a quick lesson on what our parameters for double bottoms are. But Mike, where can people find you?
Well, if people just want to ask a question or comment on something, just email me, support@Pat Trading Partners. But one of the best things, if you want to learn more about what we do, and I do specifically from a technical analysis, go to the YouTube and Pat Trading Partners. I've now got a request even late last week that people want the daily crypto videos again because of all the volatility. So I've been putting out daily. I've been putting one out Saturday and Sunday, doing the crypto analysis, and then I do follow some other key stocks that are newsworthy to help people really understand and learn some of these patterns and apply it to whatever they're doing in their own portfolio.
Mike, how many shares of Tesla do you own?
0.
We'll leave it there. Mike, thank you as always. Fantastic analysis. We're going to come right back again. Sponsors, I want to thank E-Trade and CME Group for giving us the ability to put on this show and bring it free to you. We're going to come back after a message from them. I'm super excited about this next guest. Kyla Scanlon is different from any guest we've had here in a number of ways. I'm hoping not to gush, but she's coming up next. We'll be right back.
24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now, I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped. I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay. I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.
Hey, we're back. I've got to set up. I'm going to try not to gush as I went into the break because Kyla Scanlon, who I'm going to go ahead and let her talk about herself for a minute when we bring her on here. But she is different in so many ways from anyone else we've ever had on the show. I'm going to go through a list of these, but here's how she's most different in terms of guests we've had on the show. My partner in the PureXposure Media Group, Nicole, is actually watching and listening. Biggest Kyla Scanlon fan out there. So Kyla, can you just take a few minutes and tell people what you do? And I'm going to go over the 46 different ways you're different than a normal guest on this show, but you're also the same. Good to have you, Kyla.
Yeah, no, happy to be here. Thanks for having me on. So I would describe myself as a financial content creator. So I make daily market updates on TikTok, as well as I have a YouTube channel and a Substack where I'll post different thought pieces as well as weekly market updates there. And I also work at On Deck, which is a tech startup, and work on investment education there as well.
So you're not the first female on the show. We are not misogynists here, but you're probably the youngest guest we've had. You're definitely younger than Jim Iuorio. God, is he getting old quick. But you're also going to be one of the first people ever talk about Snap on the show. You're going to definitely be the first person to talk about Roblox. You're the first TikTok content creator on the show. Probably, I said the youngest already. So let's just kind of go into your investment thesis, because one of the things I like about you the most is you do sort of a new school form of analysis in terms of the content that you create, but your view of markets is almost Buffett-esque. It's very long-term. It's very, correct me if I'm wrong when I say value-oriented. You don't want to overpay for something, and you try to look for something that's going to happen over, say, the next 5 to 20 years. Rather than our average hold time, for example, in the stock think tank's 25 days. That's not something you do. So let's talk about sort of your investment thesis before we go into the actual stocks you like.
Yeah, so I would say my thesis is pretty focused on the creator economy right now. So trying to position for companies that I think are going to be a part of this next iteration of the internet. I've never compared my style to Warren Buffett. I think he has actually like a very unique style that I don't know if I'd want to replicate, because I think he invests in a lot of boring companies, and that's great, right? For like, cash flow, profitability, et cetera. But I would think that some of my stuff is more like, okay, how are we going to move into the future? And that's why they're longer term holds, because I don't think they're going to play out in the next like 1 to 3 years. Like this is going to be like a long-term process. So that's kind of how I think about my stuff is, who is building for creators, who is building for the next version of the economy. And that's what I choose to invest in. But I make trades, like do credit spreads against some of my positions to sort of reduce cost basis and all that stuff. So I do trade within that smaller window as well.
Okay, so I think that's an important correction you just made. It's not about necessarily companies you like don't have to be making money. You just have to see a clear path to being part of the future economy. Is that fair?
Yeah, I would say so. Yeah.
Okay,
it's nice if they make money, but it's not the most important thing.
It always helps, right? So what do you consider to be the new economy, the future? What is it? Is it all? So you use a term called Metaverse. No, that's Marvel. What do you call it? Is it what do you call it? Metaverse, Ultraverse? What is it?
Metaverse, yeah.
Okay, so the Metaverse. I think of Marvel when I think of the Metaverse. I think of Marvel movies. But so you use a term in conversations we've had on Twitter before about the Metaverse. And is that something that some of the pics you sent me were Facebook or Snap, Roblox, you also like Etsy. Who of those fall? First of all, what is the Metaverse and who falls into that?
Yeah, so the Metaverse, I think, is like this next iteration of the internet. So it's virtual physical reality. It's just sort of how we'll interact in the future. And I think that Roblox is building in that space. Like Roblox long-term plan, I think, is to like to really build out the Metaverse and to really focus on that. But when I think of sort of this AR, VR, stuff that Facebook and Snapchat are doing, I think that also ties into the Metaverse. So it's just thinking about how we'll interact moving forward. So not really thinking of social networks as just social networks, but also as computing platforms, because that's what the Metaverse will turn them into.
Okay, so let's look specifically at Roblox. I don't know if it's up 5% because you came on the show today. I'm going to go ahead and take credit for that. But so Roblox is about 8. By the way, symbol is RBLX, and it's up about 5% right now to about 86.53 or so. Do you put out price targets, or do you have them sort of locked away? You're not ready to do that yet. What are you looking for in terms of growth on a stock like Roblox?
Yeah, so I'll do valuation models and all that stuff. But I think like, I think it's tough to have price targets on like things like, obviously, like I bought it when it went public. So that's kind of like the bottom. Like if it goes really far below that number, like I'll be like, okay, maybe I should consider selling out some of it. But I don't have like an exact price target in mind. It's because they're a little bit longer term, which might be a flaw in my own process and I can work on. But yeah, I think that Roblox, they are just going to continue to grow. They came into the market a little bit hot when they went public. So I was a little bit surprised with the valuation, but they're up, like you said. So that's great. Yeah.
Yeah, sure. I mean, the first public trades I'm seeing on the chart here, somewhere around $82, went up to what was a medium term high at about 87.48 and has surpassed that now, as we just mentioned. Mm-hmm. So from a perspective of when we say long term, is it fair to say outside of 5 years? So you don't necessarily care. Okay, that's not going to be a fair statement. Not that you don't care about an exit price, but that, I'm sorry, an entry price. But that's not really where you're focused, right? You're more focused on the long-term thesis of it.
Yeah, so I think it's just going to take them a while to play out how I think that they can do things. I think it's going to take them a while to age up their user base. I think it's going to take them a while to lean into the evolution of social. I think it's going to take them a bit to figure out sort of like how do they retain these younger users and age them up as well? How do you build for creators? So I think it's just going to take them, you know, a couple of years. And Roblox is really interesting because they were private for such a long time. Like they took a while to go public and they had funding all the way. But I think that they just kind of take their sweet time, and I'm willing to give them their time and to figure that stuff out.
So for lack of a better phrase, then what would be some of the roadblocks, in your opinion, to a company like this? There was a pun in there. For a company like this to actually be able to sort of, you said age up. I assume that means somebody like me who looks really young but is a lot older, to be able to like get involved in something like this. First of all, understanding it. Second of all, understanding why I want to understand it.
Yeah, exactly. Because they have like their user base is young. When they first went public, all the mainstream news sources were like, "Oh, this is just a kids game. Like this is a kids game that's going public." And so I think it's just going to take a while for people to see them as like, okay, this is actually building like a computing platform. This is the next iteration of the internet. That's what Roblox is shooting for. So I think that process is just going to take a while. And also, the mainstream, the media wasn't wrong by saying like it's a kids game, because a lot of their users are children. So it's just going to take a while for them to build for adult creators and to kind of create a platform for people who want to build on the internet.
All right, so I want to let people know we might actually go past 9 o'clock. It's part of the reason I said that, or there's two reasons I wanted you on the tail end of the show. Number one, you're in California, so it gave you a few more minutes of sleep. But number two, in terms of like several of the themes, you just did something that I liked about your content, what caught my eye in the first place. I follow you on Twitter, which is what it's at Kyla. Is that right?
At Kyla Scan.
At Kyla Scan. Okay, so that's at Kyla Scan. Next time we have you on, we'll put it on the lower third. That's my bad. But you do a lot on TikTok, which would you say you're more recognized on TikTok than anywhere else? Because a lot of that's your TikTok content going on to Twitter. Is that right?
Yeah, so I post on TikTok almost every day, a little daily market update, and I'll do different like meme things, like skits, I guess you could call them, about the markets. So I'd say like, I don't know, like following is kind of weird. So I would say, yeah, I'm probably equally as recognized on both, maybe. Yeah.
Right, so it's another first, definitely the first TikTok creator on the show. So from that perspective of, so you did that thing, I didn't even finish my sentence. You did that thing that I like what you do. You'll take something that's probably a little more complex, and you'll put it into one sentence. You did that with your inflation video, which was the first one that caught my eye. But you just said that this is a kid's game going public, which is exactly what I thought at the time. It's a kid's game going public. What do I care about this for? And then you take it to the step of the metaverse. With inflation, you said that there's inflation in things we need, and there's deflation in things we want. And I have used that multiple times without crediting you, multiple times with crediting you, completely stole it from you. And this replay goes right up. So now it's out there that I stole that from you. What theme are you looking at before we go? Because I want to go into Snap next. But what theme are you looking at that you're trying to simplify in sort of your next couple of videos?
Ooh, that's a really good question. So I think with my video process, a lot of the times it's sort of whatever is happening in the news. And there's been so many crazy things like Archegos, Elon Musk tweeting, like just sort of memifying that stuff. That's been it was sort of like what I'll do, because all of that news can be really overwhelming to people. So it's like, what does that actually mean? So I think what I've been paying, there isn't anything that's top of mind at the moment. I think the inflation narrative is pretty important. We're sort of in this inflation perpetuation cycle where, we'll talk about inflation fears will rise, and then inflation basically like manifests from that, more or less. Like obviously there's real inflation, but I think that we can tend to overextend it as well. So probably doing another video on that and just talking about that.
All right, so I said I wanted to go into Snap, but I'm all over the place. In terms of inflation, Milton Friedman basically called inflation too much money chasing too few goods. It's my theory, my stance, and we've actually talked about this on Twitter, that the more stimulus that comes out of the government, the more money there is chasing goods from fewer businesses, because about 40% of the businesses that closed during the pandemic stayed closed. Do you think there's relief to that on either side? Do you think businesses will reopen? Do you think the government needs to stop with the stimulus in order to kind of slow that flow of the growth of inflation? Do you have an opinion on that?
Yeah, I mean, so some states are starting to pull back on unemployment benefits. So I do think we are seeing, the stimulus begin to dissipate. I think that we just have a lot of reopening demand, and a lot of that is unavoidable. I was in San Diego for the first time this past weekend, and I went to a mall, which I never go to the mall, but there was a ton of people at the mall. Like lines were just wrapped around the stores, and JP Morgan released their credit card spending data. And I think restaurant spend is up 84% year over year, which makes sense, like base effects, right? But then 13% over the past 2 years. So like we're spending even more in restaurants than we were 2 years ago. So I think that there's just a lot of demand, and a lot of that is unavoidable as we kind of hopefully get to the other side of the pandemic.
So you're saying that sort of anecdotally you saw sort of mall shopping revenge, sort of like travel revenge.
Mm-hmm. Yeah, no, I think people are, going to go get new clothes because they're going out on the town. And I think that, restaurant spend is going to go up. We're going to see service spends go up. Yeah, I think that a lot of it is reopening demand.
All right, so let's talk about Snap. I think the foray back into the glasses is stupid. Tell me why I'm wrong.
Oh, wow. I mean, I think that it's pretty cool. I think that what I really like about Snapchat, and sort of, touching on my thesis for everything, is that they're building for creators. The spectacles that they have are creator only. And I think, one really cool sentence that somebody said was, the camera is the future version of the internet. So we're going to see everything through a camera, right? Like that's how it's going to be, like the AR, VR. That's how we're going to interact with the world around us, and sort of like leaning into that metaverse idea. So I think that the spectacles and the glasses are one way to do that they have.
All right, so you won't be the first person to talk about Facebook, Zillow, Etsy. Which one's your favorite of those three?
I mean, it's hard. Like Facebook is
you're long term. You're long term. So I mean, picking a favorite one's kind of dumb of me to ask. But which one do you want to talk about first? Let's talk about Facebook.
Yeah, I mean, Facebook. I think that it's just very powerful. Like Zuck is definitely, he knows what he's doing. I thought it was interesting. So they have glasses as well, as they've been building glasses, and Hugo Barra is leaving, and he's sort of been like leading that charge. So it'll be interesting to see what happens to that project. And they've said a couple of times that, building AR VR glasses is like very difficult. So I'm not sure what will happen there. But with Facebook, like, they have Facebook shops, they have WhatsApp, they have Jio, which is an Indian telecom platform. So they have just like so much reach that it's hard to really, when they said that they were going to be a computing platform, no longer a social network, I think that's like the best example of Facebook that I could think of.
Well, that's interesting, right? Because they aged up, right? I mean, my nieces, you're in your 20s, my nieces are younger than you, and they don't go on Facebook because they're nonas on Facebook. Their grandmother's on Facebook, so they don't have any interest in being on it. Is that an example of aging up?
So I don't even know if it's an example of aging up as much as just moving into a whole new category. Like, okay. I don't think Facebook is a social network anymore. I think that they're more than that. Yeah.
Do you have a feeling toward regulation of these companies? I don't mean a personal feeling. I mean, do you think it will happen?
Yeah, I mean, so I think that I think it's interesting. I think that there is going to be somewhat of a move towards regulation, and you see it in the crypto space with the IRS coming after, taxation for cryptos. Gary Gensler of the SEC is like very interested, I think, in regulating cryptos and sort of making a name for himself. So I do think that, like, as this next administration is probably going to want to make a name and sort of regulate things around. Yeah.
All right. So let's go to Zillow. All right. Zillow is Z. I have a much more aggressive way of talking than you. You're nicer than me. I hate realtors. They drive me crazy. It seems to me to be something that should have been disrupted a long time ago, and it doesn't seem to be able to be. And Zillow is one of my favorite ideas for the eventual disruption of that. It's like the ultimate middleman business, right? And I don't know if it's because consumers of houses are lazy or if it's just that burdensome of a thing that they deserve 5% of every sale. So what's your feeling on Zillow? By the way, full disclosure, I love this. I don't own it yet, but I plan to once it gets off the bottom here and trends a little bit. How do you feel about it?
Yeah, I mean, I think it's part of the reopening, well, more or less. It's part of like people just buying homes. Like I'm sure you've gotten like your friends have been like, oh, I'm buying a home, and like everybody is buying a home right now. So I think it's just part of that narrative. It's like everybody is trying to buy a home. It's kind of interesting because existing home sales were negative this last go around. Like the print was negative, and home prices are up 20% year over year. So I don't know, like if I feel like Zillow will have room to run, but it's kind of interesting. Like I feel like we could be getting sort of at the peak of this like housing frothiness too.
So, all right. So Etsy, I made my first. I didn't buy Etsy. I made my first buy on Etsy. I actually bought a 3D file of the Hulk because I'm a Marvel guy, and Hulk's my favorite. I don't know if you can tell. I'm kind of Hulk looking, and I bought a 3D statue of Hulk that I then found a 3D printer to print. And I thought, this is so cool. I started looking for every Marvel 3D thing I could find on Etsy. And these are purchases directly on Etsy. So I should be buying this stock. Is that, again, something you feel that's new? Is this established? Is this new economy? How do you see Etsy?
Yeah, so I think Etsy I think it's relatively established. I think that they have room to grow. Like sort of they're a big play on the creator economy, in my opinion, as people like monetize their processes. People sell their 3D Hulks to other people. I think that that's just like a huge marketplace opportunity. And I think it's sort of interesting. Like people love going to thrift stores, they love going vintage stores. And I think Etsy is like sort of that manifestation on the internet as well, and is able to give people who have crafty skills a place to sell their goods. And so I think it's just a great way of like the physical creator economy.
So do you think they're a viable competitor for the small business to Amazon, or is that a premature statement?
Amazon is kind of like a Facebook in my mind. Like it's just tough to go up against them. Amazon might buy Etsy one day. Like I think that's probably the most viable path. I think Amazon, they're very powerful. Yeah.
Listen, we're out of time. I was super excited to have you on. You didn't disappoint. I got to give you a few minutes to tell. There's multiple places where people can find you. That's not the case with me. How can everybody find you? And by the way, again, before you say this, I highly recommend watching Kyla's content, because if nothing else, it's fun and it's funny. And you might actually pick something up that seemed like a confusing concept to you before, that she makes very simple to understand. So where can people find you, Kyla?
Yeah, so I'm on TikTok at ky.now, so ky.now. And then I'm on Twitter at Kyla Scan, so Kyla, my first name, and then Scan, SCAN. And then I'm also on YouTube, just Kyla Scanlon. And my Substack is kyla.substack.com.
Is there anything else you want to talk about that you're doing right now, or are we done?
Yeah, so I work at On Deck, and if you're interested in joining one of our fellowships, I highly recommend that you check it out. It's beondeck.com, and happy to answer any questions about that as well.
Hey, you know what? This is my show. Take 2 minutes and tell everyone what On Deck is, because I'm going to be speaking in that at some point.
Yeah, so On Deck is building also, the Stanford, or also they're building the Stanford of the internet. So we have a series of different fellowships that people can apply for. Right now, I'm working on the On Deck Investing Fellowship, so a 10-week program focused on personal finance as well as investment analysis and research. But we also have Product Management Fellowship, Customer Sales Fellowship. We have a Founders Fellowship, so if you're a founder. We have an Angel Investing Fellowship, so just a ton of different ways to create community around learning.
Kyla, thank you so much for joining us. I'd love to have you back if you have time. Everybody, that's it. We're wrapping it up. Thanks again to E-Trade and the CME Group for allowing us to do this. Thank you for watching. Remember, the replay is going right up. So if you missed the beginning of this, Scott Bauer wants to buy an Nvidia put spread. Jim Iuorio gave you a call condor that he likes in the S&P. Mike Arnold gave you 3 full trades. Nautilus, he gave you Applied Materials, which is on his watch list. And then I don't remember the other one right now, so we'll come back to that. And then Kyla Scanlon, all kinds of information. Cheers, guys. Thanks for watching. We will see you in the next Market Think Tank. Don't forget, Jim Iuorio, Futures Edge on Friday. That's going to be at 3:30 Eastern time. Cheers, everybody.
"24/7 access to diverse global markets. Right here. That's why I added stock index futures to my trading strategy. Now when I see ups and downs coming, I'm ready. Well played. I added futures to my trading strategy. Now I have 24/7 access to diverse global markets, including crude oil. Like I always say, leave no opportunity untapped." I'll just sign that. Yeah, got it. This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do. Visit your online broker today to learn more.